Hello and welcome back to mentfx. In this video, we are going to be talking about the most crucial element to your trading, and that crucial element, as we have always said and will continue to stress, is risk management. Now, we are going to take a look at the trades that we caught this week, some of the trades we sent out in the Discord, as well as let you guys know that we will be having a video released this week or next week where I paper traded a actual entry after conducting normal analysis on here and show you guys how I managed the trade throughout its live life cycle. Even though the paper trading on TradingView absolutely sucks and I didn't understand how to use it at all, I was able to at least leave notes as the trade went on, and of course everything was recorded live, so you guys will have a in-depth look as to how I can look at a market, look at an area, and then look to enter trades using the three-step process, which we went over in the last video. So let's get into this Euro US dollar trade we caught very quickly. Let's move our thing over. This is going to be the video on gold, which we caught. I'll show you guys that in the coming days. However, let's look at the EU buys that we were able to catch with the group that ran about 1 to 60 total, and we're going to break that down today for you guys so you guys can understand how we do it, how to do it, and how to implement all the concepts that are given to you on this YouTube. Now, let's take a look at this very first one. You can see that the trade was actually sent a little bit after it had hit. This is just due to the fact that I had just seen it, entered it, and I was just able to send it out a little bit later. So, you know, whatever you guys want to believe about this doesn't really matter. We'll go over why we went in and entered this in a second. However, the main entry, the one that was actually important and sent beforehand, which we'll follow down is, and as you'll see very quickly, I'm going to kind of send this out as it went because this was live. You can see the dates here. If you want to zoom in, you can go and take a look at that. But let's actually increase this so you guys can see. Actually, it's really, really bad quality, isn't it? Either way, as you can see, price had traded down into a zone, broken above, came back to the demand zone lower, traded from there, and taken off. Now, what you'll notice is my partial already existed at about 1 to 1.5, 1 to 1.6, whatever this might have been, right? The reason I'm showing you this and the reason I'm walking you through the way I even send out the management of the trades that I send out is because I need a lot of you to understand that one of the most crucial elements to your entire trading plan is going to come down to risk management and the way that you manage risk. Your strategy isn't shit without an actual decided upon way that you're going to manage it. You can go trade a trend line profitably. You can also trade Wyckoff profitably. But unless you're using proper risk management, neither is going to work for you forever, ultimately, right? Because risk management will control the entirety of what you do in this market. Now, that said, we had our first partial at a very early area. Now, just because I partial, another part of my strategy is understanding that after partialing, there are still opportunities to get back in and pyramid yourself into price at lower areas. So we partialed here. However, as we began to watch price, our next entry, as you can see from the Wyckoff here, and we'll take a look at this in a second off of the 5-second chart, again, sent at the time right before this had entered, ended up coming into that area and actually hitting it multiple times, as you can see. And from there, took off to meet our first partial again. Now, similarly, this trade that was entered right here, again, was partialed at about 1 to 2.5, 1 to 1.5. Now, the reason I bring this up, and I want you guys to understand this in depth, is because a lot of you, especially those of you that start in the smart money industry, or the smart money concept ways of trading, end up just wanting that heroin dose of your 1 to 10, 1 to 100, 1 to 500, whatever it is, this crazy RRs. And when you don't hit those, or you get stopped at break even, or even lose, you don't understand that that loss could have been fully mitigated had you actually approached the trade from a proper management perspective. Now, the reason I say that is because this specific trade right here, it could have ran to this partial and then lost. It could have went straight to break even. But at that point, if this came all the way down here and broke down, money was secured on it and there was actually profit made. Now, on the other hand, if this trade does want to run and take off to the fucking moon, then you get to catch that actual move and make partials along the way. Even though this trade right here ran 1 to 60, we did not secure 1 to 60 on the trade. Overall, the securing of the trade, based on how you managed it, based on how I managed it in this case, so it would be different for some of you that have a different way of managing, this 1 to 60, in essence, for me, only ran 7.5 RR, or about 8 RR. Yeah, it was 8 RR. So that means that whether you risk 1%, you made 8%. Whether you risk 0.5%, you made 4%, and so on and so forth. Because I understand that I have an edge in this market and I can catch potential 1 to 50s, 1 to 60s, or much higher, I understand that I can partial on the way, and if the opportunity presents itself like it does here, get back in. So let's quickly talk about how we did this, why we did this, and how you can start to do it yourself, and how exactly we manage this. So I have the replay tool here for just a little bit to run you guys through what's going on here very quickly. If you remember any of the top down, especially if you're in the mentorship, and again, the mentorship is only available at this website right here. I will never ask for you for your money anywhere else because there's a lot of scam accounts. Let's get back to this now. So as you all know, I've been relatively bullish on Euro USD. I've made analysis on this multiple times. I look at EU a lot. Very major pair, very low spread. I like it. We have this final demand zone right here that was left behind when price decided to break higher, and we're expecting most likely to see buys from this area. Now price can come much deeper into it and then take off. Price can actually come lower and take it out completely and then come up. But the idea is we're probably going to get multiple mitigations of this area, or one. We don't know 100%. We never know 100% because you have to recognize that we are trading the footprints of smart money. And because you're trading the footprints, you never know if an actual demand zone wants to function as the final mitigation before completely new highs are met, potentially even up here, right? Because I've been relatively bullish on this entire pair since COVID. So since March of 2020, I've wanted this pair to come and trade up into this supply zone denoted right here. And most importantly, I wanted to see it come and take out the liquidity that rests above this high to come and start fulfilling some of the inefficiencies and supply zones that exist up in these areas, specifically the imbalances and so on and so forth of the areas up here. So again, we've been bullish on this since it's tapped into this long-term demand zone. And since COVID, I've just been bullish on this, expecting higher prices. And I'm still going to be expecting higher prices on it, even if it doesn't hold short-term. So that means that we might have multiple abilities to get involved in buys and even counter trend sells along the way. So we have this demand zone and prices tapped into that demand zone. And that's a monthly demand zone. Now we can refine that. We can keep refining it to some areas in here. As you can see, that can be refined, of course, to some areas in here. Of course, in the mentorship, we go over this type of refinement, and you can see very easily what we're tapping into. And that said, price can easily still come lower into deeper areas of these demand zones because there are still institutional orders resting in those areas. And now we are starting to create some potential liquidity that can be cleared if they want to clear it before moving higher, if that's what they want to do. And again, this is not financial advice, so just keep that in mind as you analyze your charts. Anything you do on the charts is your own responsibility. Now, as we do this and we get down into the timeframes and we start to actually see the way price was delivered to us, we had these breaks of structure earlier here with Wyckoff in here that you might have caught on the lower timeframes. I know some people in the mentorship did. I did not. Doesn't really matter. Price took off relatively quickly, respecting some areas and breaking higher. Now, if we get onto a 15-minute chart, take a look at this, we'll see that price broke above this high right here, putting in new bullish momentum into the market, leaving behind the demand zones that exist at these levels here. As you can see, if we go to a 30-minute, you can see very clearly the demand zones that exist right here. Price comes and taps into these demand zones. We actually had a few people in the mentorship buy off this. I did not myself. Doesn't really matter. You know, there's constant opportunities for you to be involved in this market, and broke above after some time and then did the same thing in this area, right? So price just came, momentously broke this and left behind the demand zones in this area. And again, you can denote demand zones multiple ways. This is something we talk about in the mentorship, but overall you can just use this last down candle because that's the same thing, right? This down move. Otherwise, you can go ahead and refine this, and that's what we actually did when we caught this actual trade. And we refined this demand zone to this last down move before the up move, at which point we wanted to find our potential buys into this market. Now, as we did this, we can start to put some of the... So let's actually watch this on the 1 minute. Now on the 1 minute, because we want to get involved in this price action here, we saw this relatively large drop off. We were still not involved in any buys at this point. If you recall to the Discord, the first buy was only taken after we had this run down and the break above. So of course we waited, but we did have this refined area that you just saw me refine for you guys. in the video. So let's play this forward a little bit. Price comes down, taps into that area, relatively simple. Now on the 30-second, this is why I want to take this. Again, structure is being denoted by these lower highs, lower lows, very simple. And this was actually a very early confirmation entry just because I wanted to make sure I didn't miss the move. Now, as price gets above here, we put a little bit of risk on this original trade right here, which is the last down move right here. Of course, if any of you know, including the wick, that is your final demand zone. And as you can see, that is actually the first entry that we took on this. And that's what I had sent out right there. Price came back down, tapped into it, and began to move higher. Now, what's interesting is at this specific point, I was actually operating on the 15-second chart, I believe, or the 5-second. I think it was the 15-second. We can check very quickly where that entry was. Yep, it was the 5-second chart. Okay, fantastic. So we were on the 5-second chart, and what you'll notice the second we get down to the 5-second is very simply, as we've spoken about multiple times, we begin to form our Wyckoffian setup, right? So we have the selling climax followed by the automatic rally. Actually, sorry, I get a little bit OCD about the the italics or not, followed by the ST, creating potential intermediary liquidity, intermediary lows that we understand is what going to be liquidated most likely if we're to undergo Wyckoff. We have the SOS and B form, right, showing us that we potentially want to put in higher prices, just liquidating some highs. Then we drop back down. Also, this SOS B creates these equal highs. Drop back down to create an ST in B, as you can see. Again, the expectation is that there could be a spring as well because we have this overall area, and easily we can have a spring, or we might have prices deliver higher just after that. So we have this ST and B, also known as the spring in this specific case. And from there on out, we have the sign of strength, right? And already you are valid to go for potential buys here. I wasn't fully confirmed about this just yet. And instead we got this next SOS, right? So like you can call this an SOS 2. Doesn't really exist. But the reality is in Wyckoff itself, you have multiple areas that you kind of learn to understand as your own form of Wyckoff. And that's something that we'll go over with some of the students in the mentorship program. Now, as we do this, what you'll also notice is that this Wyckoff itself, right? So let's make this, hopefully I can, there we go. So what you'll notice as we do all this is we actually, on the 1 minute, left behind. So let's just hide this all for a second. This demand zone right here, which again, we can move to this last demand zone right here, which we can refine, right? And what you'll notice is I actually use this last down move. And if we draw that out, what you'll notice about this specific move, if we go back to the 5-second, is it's the last down moves before the crazy up moves. Now, again, you can go ahead and refine this very crazily if you'd like to this potential last demand zone here that you can look to trade, or like I did, as you'll notice, refine it to just the opening of the top of the schematic and the low presented by that, which came to mitigate, which again is that 1 minute demand zone. So at that specific point, we actually put this trade right here at break even, which means we now have zero risk running on this trade. And not only do we have zero risk on it, but we also have taken the partial for the first trade. So at the specific point, I had already taken my partial. Like I said, I partial early. I like to mitigate my trades or manage my trades very aggressively because I understand from a standpoint of the way I trade that I can get involved on multiple areas of the market. Now, as we have this, we're kind of running out of time here, so I'm gonna have to speed this up a little bit. We have price come and play in or around this area for quite a while, creating some intermediary term SOSs. Finally, we get that drop back into that area. Now, at this specific point, we already break even on this, and our new stop loss is locked in at these lows, or just a little bit under it, because remember, we can have 100% of mitigation, so it's just locked in right there. That's absolutely fine. And this one also is locked in right there, because we always lock in a little bit below. And again, spread on buys does not matter, especially if you understand, because you're buying at, you're exiting at your stop loss at the bid, which means it's actually on the chart price. So unless the chart actually hits this low right here specifically, you should not be being taken out of the trade. It does not happen. Now, from that point, what you'll notice is we've just traded off a fractal accumulation, also off of an original entry. And from there, we have the crazy run up. Now we can get onto a higher time frame and we can kind of watch this play out. We very quickly saw this run up occur. And again, you never know how high this is going to go. This price could have easily came right here and then dropped off, right? Now, to some people that are trading smart money, this would have looked like a complete loss. However, if you understand how you're properly partialing, how you're properly breaking even, and how you're respecting or following structure, then this completely changes from either a loss trade to a break-even trade or even a multi-profit secure trade. Because what you'll notice, if I put this back on right here, we had multiple partials throughout. And again, this is not incentive for you to go and trade this way. It's not incentive for you to go mitigate or manage your trades the way I do, but this is specifically how I manage my trades and how I like to do it. So even though trades run 1 to 60, 1 to 80, 1 to 100, 1 to 300, I am not securing 300%. I am not securing 150%. I'm never securing 60 or 80% on trades like that. That does not happen. And on top of that, just because I say it's 1RR does not mean I'm risking 1%. My risk is also lower because it helps me psychologically, because like anyone, I still have my own emotional issues. So again, use this as a case study, whatever you might want. Again, we went through the images we sent prior. And what you'll notice, if we just work through these, is we have this first partial. If we keep going, you'll notice we have the second trade partial right here. So this is that entry, the second trade partial. And at that point, we BE'd the first trade, and then we second trade BE'd after this high was made, again, following structure. As we continue going, we had second partial of both trades residing at this supply zone right here. That was met relatively quickly, as you can see. Our third partial was residing at this supply zone right here. And then after this high, we're not looking for partials. We're looking to manage the trade along with structure. So what you'll notice is third partial were met. So again, recognize that every time we meet partials, half of my position size is decreasing, right? My position size is decreasing by half. So understand that 1 to 60 is not 60%, all right? 1 to 60 can be as low as 5 to 8%, 5 to 10%, 5 to 10 RR overall on your account. So hopefully you guys understand that. If you don't, then don't watch my stuff anymore. But what you'll notice is we continue to mitigate with structure as per structural lows, and on this move right here. So even though this actually came a lot higher after, on this move right here, this down move right here, this was stopped at this high. Now again, I can't show you that I actually locked it in there, but this is where we locked it in. That was 1 to 60 total. On the other hand, if we actually stop this really quickly and we zoom out right here, you'll notice that this trade, after taking us out at this zone here, right? So we were locked into, as you can see, this low right here, just there. Now, after that took us out right here, you'll notice that price never came back to even the original entry and then continued significantly higher. So again, I could have gone on here and made a video talking about how this trade ran, you know, because we had both of these trades running since one was already break even when we entered the second one. So, you know, it's risk free. One ran 1 to 40, the other ran 1 to 80, right? So this was a 1 to 20. If I really wanted to, I could come on here and tell you this was 1 to 20, but it was not. As per my trade management and the way I like to manage my trades and the way that structure moves for me and the way that I understand the market, this was a perfectly locked in 1 to 60 that did not actually secure 1 to 60, but secure trades along the way. And this is how I look to get involved in the market every single day, whenever I do. And again, this is not investment advice, and I hope you took something from this video. Thank you for watching, guys, and I'll see you in the next one.